This is Ryan Mallory for SharePointer.com. Today is December 9th, 2010. The purpose of this video is basically to go over a day trade that was made today in LULU, also known as LULU. The company reported outstanding earnings. As a result, the stock itself was up over 15% to start the day, and at the third minute here, and this is a 1 minute chart, by the way, that I'm using. At the third minute, you have a high of 64.62. So that was automatically our where we would want to get in at if it broke that particular candle's highs. So 64.63 is where we want to put a stop order in to get into the trade. Didn't quite get there within the first 15 minutes. We got as high as about 64.57 before it pulled back again, and as we progressed throughout the morning, you could see it stayed it hugged the highs very tight, which is a good flag, good indication that the stock is definitely trying to move higher. Finally, at 10:01 a.m., we got in at 64.63. It goes just up a little bit before forming a doji and pulling back some. Now, on this particular trade, and the big thing about day trading stocks is you have to use the position size is very important, because if you go too large, you're gonna get very fidgety about even the slightest price move, and as a result, and these stocks are very volatile. I mean, it's up 15%. So if it moves 1 or 2%, investors aren't really going to care too much about that, or the stock itself, I guess I should say, isn't going to be affected all that much. It's going to vacillate quite a bit when it's up that high, and you got to be willing to give a little bit. And so if you're using a really large position size, you're going to be too quick to get out of the trade. So you want to find that right position. Some people use 5%, some people use 10%. 15% is probably a little bit too much. More than 15-20% is a little too much for earnings trades, in my opinion at least. But I mean, some people do it, and they're okay with that kind of volatility in their portfolio. For me, even personally, I would not fare as well. So LULU, it breaks out, it pulls back, and at one point it goes down as low as 63.89, which is almost a good 80 cents off of the entry. So, and then it comes up higher, and then even goes lower. So now you're down about $1 on the trade. That's why I'm saying position size is, depending on the trade itself too, but position size is very important. And finally, it gets some momentum here, and once it does, you can see here it starts moving up very nicely. So right here around 65.38, that's where I'm up about a 1% on the trade right now. I want to start booking gains, so I take half off the table right there. And then it continues to go ahead and climb higher, a little bit of a pullback. And also I put my stop loss up at break even, because I don't want it to dip below my stop loss. And finally I get out at 65.80. But you can see even then I might have gone out a little bit too early. I might have been better off just selling a quarter of my position and letting the rest run that last quarter position, because it did go on for about another $1, and then finally it starts giving up some of those gains. Excuse me, it starts giving up some of those gains. But overall, as you can see here, just looking at it, was a very playable trade. There was money to be made on it, but like any stock here, you have to be cognizant of your position size. You can't go 100% of your capital on one trade like this. It can mess you up. Okay, I mean, it'll stop you out sooner than you really want to be stopped out, because you'll start looking at dollars and cents and realize that you're losing more money than you really prefer to lose. So keep position size in mind, and the kind of stock that you're trading, and earnings and large gap up plays with earnings. The stocks are volatile, especially when they're in excess of 10%. So keep all of this in mind when you're trading. Have a game plan going into it as far as stop loss, entry, and also know what you want to put at risk. Don't just think about how much money you want to make and how much money that's going to take to make that money. Instead, think about how much money you're willing to lose on the trade. So many people get those backwards. And for day trades, that's it for today. And I don't day trade a whole lot, but when I see opportunities like this, I do try to jump on it. So until next time, so long.